Years ago, we heard a song coming up as children that people sung often. And the song says, if I don't wake up in the morning, the song says it's all right. And what they were implying is they've got the spiritual business in order. And if they don't wake up the next day, there's a better place without no more worries, no more crying, no more tears, no more bills. It's all right. There's another question is, if you don't wake up in the morning naturally or financially, what would happen to the wife, the husband, the children? How does that look if you don't wake up in the morning? I want you to think about that. I'm going to show you an example of a young man that didn't wake up that next morning. Look at this example here. They're both very young. They're bringing in $3,500 per month per person. I want you to see the bills that they have, monthly bills, is $7,000 a month, exactly what they're bringing in. So the question then becomes, if either one, either him or her, don't wake up in the morning, how will the family fare? If all of a sudden he's no longer here, if this happens to him, what will this family lose? They're going to probably lose a mortgage. They're going to probably have to pull that child, or she will in this example, out of child care, because now she has to make it on half what was hard to make it on between the two of them. This is very, very critical. And there's a certain way that people try to protect themselves from that situation. And there's something called Index Universal Life. Some call it there's whole life, variable life, all kind of different names. But in this example here, he has $250,000 on him. Same thing on his wife. They're paying $251 per month. The agent told them that if you keep paying that, by the time you get to 65 years old, you got $127,000 saved. Now there's some benefits in this kind of program. You can borrow the interest, you can do a loan from the policy of the cash value. A loan, meaning you got to pay it back. If you don't pay it back, they will subtract it from the life insurance proceeds before the family gets anything. So they got $250,000. They go in there and take out $50,000, whether it be the cash or interest, and then die. This amount is subtracted from the death benefit. Now let's look at this same monthly budget. If they put that same amount of money in the family budget, $251 per month, they can put the same $250,000 on him, the same thing on her, and the cost of that $251, only $88 is paying for a 30-year level term, and I'm going to talk about that in just a moment. Now, if they're saving that kind of money, they're only paying $88 a month, what would they do with the difference in that premium, that $251? There's a difference there. Let's take a look at that. That's $163 per month difference. They're going to take that at a pretty reasonable rate of return over the long term, 9%, and put that aside in a Roth IRA. And they got $300,000 at 65 years old. If something would have happened to him or her, the family gets the $300,000 of the investment, and they get the $250,000 of life insurance, not just one or the other. And they don't have to borrow the money to get it out. They just withdraw it out. Borrowing and withdrawing is like the night and the day. And you much rather be in a position to withdraw than you would borrow. Now, you may say, Ricky, why in the world then should they get a term policy? There's something called the theory of decreasing responsibility. And what this theory says is when you're young, the kids are young, high debt, house mortgage, the loss of an income would be devastating. You've all seen people that died and didn't have any insurance in the family, friends, neighbors, church members, co-workers. But as we get older, the need for life insurance is going to go away because the kids are grown, the debts are lower, the mortgage is paid, and what they need at that time is cash money. There are two major things that we have to always think about. That first thing we've got to think about is number one is dying too soon and not having the business in order. Number two is living too long, having worked all their lives and have really nothing to show for all that they've done. Ladies and gentlemen, what I'm talking about today is extremely, extremely important. I want to encourage you to share this with a son or daughter that has children, with a mother or father, with a son or with a cousin or a niece or nephew, with your neighbors, your church members, your friend, your pastor, the assistant, the deacons, the trustees, your brothers and sisters. Ask them, if you don't wake up in the morning, will it be all right financially?